What is going on, guys? Welcome back to the channel. Today I'm going to be showing you guys how you could have caught this move on gold using simple price action, simple analysis, and how you could have used specifically the higher timeframes to try and make sense of why and how this move could have played out and how you could have entered using simple price action. I hope you guys enjoy. It'll be a value-packed video. Stick around to the end. There'll be a lot of tips and insights into how you can better your trading system. Okay, so let's have a look. This is the move here. It's still happening as we speak, and I could still push further. Full disclosure, I didn't take this trade. First of all, because it wasn't 100% in my trading times. It was sort of in that break between London and pre-New York, which I don't really trade. I usually take a break in that hour, and this happened to play out in that hour. And that's fine, there's nothing I can do about it. And also slowly transitioning to just trading GJ. So I'm not 100% looking at gold, but I think this is a really good example of how you can use price action, the higher time frames like the daily, the 4 hour, to try and make sense of what price is actually doing. And you'll find that it's actually very simple, okay? And I want you guys to, throughout this video, forget about all these entry techniques, forget about the way you're supposed to trade, and I just want you to look at price and try and make sense of how price is behaving around certain levels, where it's closing, and you'll start to see that it actually makes a lot of sense. Okay, so I'm going to get rid of all these drawings and we're going to start at the daily time frame. Okay, so if we move back, okay, so at the start of today's day, we can see that before this breakout we were in a range. Okay, we were in this gold range right here, in this gold range just here, okay, and we were just stuck in that range. And you're going to have trades in there, but really you want to try and wait for price to push out of those ranges, because realistically this is just a range. Okay, this is a range and a ranging market. Okay, you're not going to find really great high probability moves in here, especially if you keep your trading very simple. Okay, so now we can see prices closed outside of this range. Okay, so if we look at how we can draw this up, we have a clear daily resistance over here which we've broken. Okay, and we'll mark that for daily, for 1 day resistance. Okay, so you can see closed outside of resistance, and what we can see previously is we have this massive wick to the left. A wick can be a rejection, but a lot of the times a wick is just structure on lower time frames. Okay, so if you imagine what this wick could look like on lower time frames, it's simply just going to be price pushing, making a high and coming back. Okay, sure, it's a rejection, but point is we still made structure, we still made a higher high at that level right there. Okay, and what can we tell about price is that if price respects a support, okay, so if price respects this support, there's a very good chance we're going to push up and retest that high. Okay, or at least make really good headway into that range, especially if this is a 100 pip range like we can see here. Okay, 270 pip range. Okay, so there's a very good chance if we hold support, which we did, we held support down here, and then we pushed bullish again, there's a good chance we're going to come up and fill this range. That's the daily. We can see we made a nice breakout on the daily close. So when we come to the charts today, we can start thinking, okay, there's a good chance we can come down, create a bottom wick, but there's a very good chance by the end of the day, we're going to push and fill this range. Okay, because everything's bullish. Okay, we've held support, we've now broken out, we've made new highs, and we're pushing bullish. Okay, so then we go down to the 4 hour. Okay, and what can we see with the 4 hour? So this is still very early. Okay, but first of all, we can see the 4 hours pushing bullish. We can see that daily holding support, and now we're pushing above this range. And here we can see that structure I was talking about before. So this wick is really just a new high on lower time frames. Okay, but if we go forward to our pre-London session, so this is still Asia, and then we go one more. Okay, so here is where we start looking at London, 1 a.m. EST. So pre-London, still very early, but what can we start seeing here is now we've had the daily closing above previous resistance. We've also had the 4 hour closing now above previous resistance. Okay, so there's our 4 hour resistance, and we can see that the 4 hour has created support and held that support. Okay, so what does that show us? First of all, we're making higher highs and higher lows. Okay, so new higher low, new higher high. So each time we're pushing, we're making new highs. Each time we're finding support, we're making new higher lows. Okay, so higher low, and high low. Okay, and each time we're holding support, we're pushing up to make new higher highs. Okay, so does that mean we can enter straight away? Sure, it does make sense. It does make sense to try and enter above this 4 hour to try and get the push to fill this range. Okay, but there's a good chance, this is going to come down. It's likely going to grab liquidity. It's likely going to pull back into lower time frame levels to find new support and create new structure before breaking and pushing bullish again. And what do we know about gold during pre-London is that it likes to fake out. Okay, so if we then go down to the lower time frames, we can start seeing here now, there's new structure here on the 1 hour that we need to be careful of. Okay, so if we're trying to take buys here, it does still make sense, but we're trading right into this 1 hour resistance, which we can see we've reacted to before. We can see reacted here and reacted here. Okay, so this is a key level in the market that we can't just quite ignore. Then we go down to the 30-minute and we start seeing more. Okay, this is really a key level. The 30-minute rejected here once, twice, 3 times, 4 times. Okay, so we can't really think about buying until we sort of close back above this level. Keep in mind though, everything is bullish, so sells don't really make sense. Okay, and then we go down to the 15-minute and we can see again, this key level is a really strong level where if we close above, there's a very good chance we can push up and fill this range. Okay, so let's play it forward, keeping in mind where our 4 hour resistance is, our daily resistance, and let's see what price does. Okay, so we chill out and here's the breakout. Okay, it's not quite a breakout, but it's pushing, and you can imagine a lot of people will have entered here. Okay, and sure, that could be a trade, but you can see that massive rejection. Like we said, gold likes to fake out during pre-London, and here we can see that potentially happening. Okay, there's another breakout. Is this a good trade? It could potentially work. Okay, it could potentially work. We found support. We've now pushed bullish. It does make sense to take this trade, but we need to keep in mind it's still very early in pre-London. And like I said, I say it again and again, gold very often likes to come down, grab liquidity before pushing, especially in pre-London. When volume isn't that high on gold, it will very often come down, create new structure. It'll come down, find support, sometimes grab liquidity before continuing bullish. Okay, and that's just one of those things you need to learn about trading gold. One of the benefits of trading one system for a long period of time. So we go forward, and you would have been safe if you tried to enter this, because if you waited for the break of the high, you probably would have been okay. You wouldn't have been triggered. Okay, this buy does make sense, but like I said, gold likes to fake out during pre-London. Okay, then what can we see? We start pulling back into these levels. Okay, and like I said, gold likes to grab liquidity, especially before big moves. Think of it like stairs, right? Stairs don't just go all the way up straight away. They come down before they go up. It's like this, the market is sort of charging before it is ready to go. Okay, so keep going forward. What can we see? What can we see? Gold pushing bearish. There's a lot of people that thinking, okay, it's rejected this level, but everything still points bullish, right? Everything still points bullish. The 4 hours holding support, the daily's broken out, the hourly's bullish, and again, this is annoying. Okay, what happens next? We can see that we're starting to form some form of a new range. So we have support and we have resistance, and we've now broken out of that resistance. But to try and take buys here, we're trading right into this previous resistance. Okay, so that's not a very smart idea. So we wait, we see, okay, we're back in resistance. Okay, this is a 30-minute closure, back in resistance, back in the range, pardon me. This isn't a bad trade, but the problem is you have a 27 pip stop, quite big. Okay, so you wait, pull back again, still holding. Okay, this is very important here. So we pushed up, we created a new higher high. Now we came down and we found new support and held this previous support. Okay, then we keep going. We failed to close above this level. Next candle has a nice wick down, and then we end up closing above this level. Okay, now you can start thinking. Okay, you can start thinking here. Gold has broken out of a level, shown its bullish bias, came down, created structure, found support, pushed up, created a new high, came down, found support again, grabbed liquidity, and now it's closing back inside a range and back above 4 hour resistance and back above 15-minute resistance with clean range to the left. What are the chances of this going up? Quite high, quite high. Okay, everything is bullish. You've found support. This is a very high probability trade. And when you think about it, all we're doing here is trying to catch the lower high continuation. So gold's made a new high, it's then come back up, and we're trying to catch this move back up. So we're trying to catch here, we're trying to catch this move back up to retest those highs. Okay, and keep in mind the daily is very bullish and the 4 hours very, very bullish, and we're heading into a high volume time. Okay, we push around this stage, you can start thinking, okay, why don't we close some positions here? Because if we're honest, we're pushing into resistance. Okay, we close with no top wick. That's a high chance that price fails to continue. Why don't we close some positions? Okay, so let's say right here you close 60% of your positions because you know that there's a high time frame bias. You know that your analysis still makes a lot of sense. You know that gold's got a lot of volume and you found support and you've grabbed liquidity, but you need to be honest here and start thinking we're running into resistance. Okay, but if you have that confidence that the high time frames is still in your favor, there's a very good chance you could continue here. Okay, so on that trade you would have made 18 pips. Okay, not bad, pretty much a 1-to-1. Let's say you close 80% there and you let the rest run. Okay, then you see, oh, okay, and then you just trail your stops, trail, simple as that. Okay, now I know it's easier said than done, but I really hope that sort of gave you a snapshot of how you can start looking at the higher time frames to try and analyze what price is doing, and how you can start looking at one pair and try and figure out how it moves. For example, you know that gold during pre-London likes to fake out, so you sometimes need to wait for structure to be formed before a new breakout. And if you look on the 30-minute here, realistically, all we're doing is taking a fake out. Okay, we have the range, price breaks out of that range, the high time frame is bullish, then we close back in range. With our high time frame bullish, what are the chances price continues, especially when the daily has such a big wick to fill? Okay, so yeah, hopefully that made some sense, and I hope you guys enjoyed.